Welcome to The Explainer. Today, we're going to pull back the curtain on something that affects all of us, even if we don't see it every day: financial regulation. It's basically the invisible rulebook that keeps our economy stable and, maybe most importantly, keeps your money safe.
So let's just get right to it with a question that's probably crossed your mind. Is the money you put in your bank account really safe? How do you know it's going to be there when you need it?
Well, the answer is that it's not just luck. It's all by design. Think of it like a fortress, a really powerful system of rules and, guardians, all working behind the scenes to make sure everything stays stable and trustworthy.
Okay, so why do we even need all these rules? It seems complicated, right? But just imagine for a second a world without them. The results? Well, they could be a total disaster.
Yeah, it really boils down to three huge things. First, you've got stability. This is all about preventing those system-wide meltdowns that you hear about, the kind that can wreck an entire economy. Then there's integrity, basically stopping fraud and crime to protect your money. And when you have those two, you get the third and most important thing: confidence. Confidence is the fuel for the economy. It's what makes people comfortable enough to invest, to save, and to keep the whole thing moving.
All right, so who are the people, the institutions, actually enforcing these rules? Let's meet the key players. You can think of them as the guardians of our financial system, and each one has a super important job. First up is the big one, the BSP, or Banco Central de Filipinas. These guys are the first line of defense. They're the ones telling banks how much cash they need to keep on hand. Just in case. It prevents a few bad decisions from bringing down the entire bank. They also handle the big picture stuff, like monetary policy, and they can even step in with emergency loans to stop a panic before it starts.
Okay, next we have the PDIC. Their job is so crucial, especially when things go wrong. They're the ones who provide deposit insurance. That's what stops everyone from rushing to the bank to pull their money out at the first sign of trouble. And if a bank does fail, the PDIC steps right in to manage the situation and make sure depositors like you and me are protected.
And then you have the SEC, the Securities and Exchange Commission. So while the BSP and PDIC are focused on banks, the SEC is the watchdog for the stock market. They're making sure public companies are being honest and playing by the rules. This is absolutely vital for making sure investors feel safe, which, in turn, helps companies grow and fuels the economy.
And last but not least, we have the AMLC, the Anti-Money Laundering Council. Think of these guys as the financial systems detectives. Their job is to hunt down suspicious transactions and financial crimes, like money laundering. This is so important for keeping our financial system clean and maintaining trust with the rest of the world.
All right, so we've met the guardians. Now let's talk about their rulebook. And I'm not talking about a set of friendly suggestions. These are powerful laws that give these agencies their authority, their teeth, to actually enforce the rules of the game. And what's really cool is how clearly this all lines up. Just look at this. You've got the general banking law, and that's the BSP's playbook. You have the PDIC charter, which, surprise, gives the PDIC its power. The Securities Regulation Code is the SEC's domain, and the Anti-Money Laundering Act is the AMLC's main weapon. See? It's a super clear system. Everyone knows their job and which law backs them up.
And this right here, this is where it all becomes real for us. This number, 500,000 pesos, that's the impact of that PDIC charter we just talked about. It's not just some abstract figure. It's a solid promise from the government that your savings are protected up to that amount, per bank. That promise, that is the absolute bedrock of public confidence.
Okay, so we've got the guardians and we've got the rules. But how does it all fit together? How do they make sure they're not just protecting one bank over here, but the entire system?
Well, it comes down to having two different points of view. You've got microprudential regulation, which is a fancy way of saying you're looking at the health of each individual bank, like checking each tree in the forest. But you also need macroprudential regulation. That's where you step back and look at the whole forest to spot system-wide risks, the things that could cause a massive wildfire. You absolutely need both to keep the whole system healthy. And here's something really important to understand. Regulation isn't some old, dusty book that never changes. It has to be a living, breathing thing. It's always evolving. So, after major global events, we got things like Basel III, which made banks stronger. Now, with fintech and digital banks popping up everywhere, we're getting new rules for that. It's a constant game of catch-up, always trying to stay one step ahead of the next big challenge.
So after all this, why should you care? What does it all mean for you? Well, it means everything. This whole system is the reason you can put your savings in a bank and sleep at night. It's why you can get a loan for a home or a business. It's that invisible safety net that underpins not just the economy, but your own personal financial life.
And that brings us to our final thought for today. Finance is changing at lightning speed, right? We've got digital banks, crypto, all sorts of new technology. The very idea of money is evolving. This means our rulebook has to evolve with it. The big question now is, how do our guardians adapt to keep us safe in this new world without crushing the innovation that's driving us forward? That's the challenge for the next chapter.